Welcome back. We're here for the October
Mm-hmm.
edition of the Beyond Wealth Advisors Economic Update. I'm John Cleaver, partner and senior financial advisor, and as always,
Dennis Bacon, Chief Investment Officer at Beyond Wealth Advisors.
so we're excited to be back as we kind of turn into fall here a little bit, and let's just jump right in.
Okay.
So
I think
last
it's a good
month
idea.
we
Yep.
talked about that inflation's not dead, and it appears that the Federal Reserve is still in a little bit of that tightening mode, but in a bit of a surprise. They kind of showed their cards a little bit and indicated that maybe they won't cut rates in the beginning of 2024, like maybe we suspected. And so maybe they're hinting towards recessions a little further out than we thought.
Right.
How's that going to impact the market?
Well, I think it's a bit of a confirmation of what we alluded to last month, where we talked about during election years there's a tendency to bolster the economy.
Really?
And I think the Fed is anticipating that a little bit. They're not really reacting or trying to embellish it a little bit, but I think that's the reaction, and it makes me think they believe that's in play.
That's going to play out. Yeah. Well, obviously they have done some tightening. In fact, we're starting to see that play out in some of the numbers. Employment rate was a low of 3.4. It's creeping up. It's about 3.8 right now. We've seen housing turn into more of a negative territory, which maybe that's a little bit of a good thing. Consumer confidence has dropped a little bit, so some of that tightening is starting to maybe weigh on the consumer a little bit. And then, we know that just inflation gets measured different ways. Maybe headline inflation has still accelerated, but core inflation has dropped back maybe into the 4%, low 4% range. So in some aspects, that doesn't look great for the economy because we are seeing that tightening. How does that fly in the face of the Fed's intentions and kind of where we go from here?
Okay. Well, I think the economy is slowing down some, and that somewhat gives us some concern. But we know that it needs to happen. We can but the biggest thing, we continue to exhibit caution going forward. We don't know how far the slowdown will take, whether the soft landing will take place or not. The economy actually remains strong in pockets. But we do not believe we're heading to a deep decline at this point in time. It's probably the biggest takeaway. We don't look at a deep decline. We do see a slowing down, and the potential for a soft land is much better than what it was 6 months ago.
Okay, so that's good. So we have seen recently a little bit of a decline in stocks, maybe a more broad decline in stocks. There's a few safe havens, a few areas like energy, communications that maybe are doing okay. Are we nearing the beginning or the end of this decline?
Yes and yes.
Okay.
This really kind of plays into what we have talked about a rolling recession. The thesis of the energy doing really well, while housing is not doing well. Some other areas kind of fall into that category also. And with the 10-year Treasury reaching about a 15-year high, well over 4.75, considering it wasn't that long ago, we were under 2, and well under 2. I think that it's to be expected there would be some slowing down. Consumer confidence is impacted. They have higher interest rates. They can't go out and borrow as much. And really, that's the catalyst. That truly is the catalyst for breaking the back of inflation. And there is going to be some areas where there's some pain during that time, if you will. But it's not going to be, we're really in the interest rate area where we have lived and breathed for most of the last several before the last 15 years, 3 or 4 decades before that, we're right where we were then, and we had great growth in the economy, great growth in the markets, and had were very robust. So I'm not overly concerned. There is a becoming acclimated to this area, and we may stay up in this area. Maybe not quite where we are now. I think it'll drop some, but we'll stay in the general area. We're not going back to 2% mortgages. So just so you know.
Bummer. All right. So with that said, though, then so what's the forward look? Where do we go from here, and where's the opportunities, and how can we, maybe take advantage of what is on the horizon?
I think really it's the theme that we've talked about a lot. We need to stay diversified. Keep a little bit of cash for your short-term needs, what you need for the next 6 to 8 months. If you're taking money out of your investments, I think keeping that amount in cash makes sense. It usually always does make sense,
Right.
but now probably more so than
you can
than
actually
ever.
get rewarded for holding a little bit of
Right,
cash.
you're getting a 5% plus return on money markets. Right now, we're sitting around 4,300 on the S&P. There's a big support level at about 4,100, which is still 3 or 4% below where we are today.
Right.
There's another support level around 3,800. I don't know that we're going to test that support level, but I'd be surprised if we don't test the 4,100 level sometime here in the near future. Hope we don't, but the possibility
it wouldn't be out of the normal.
It would be pretty normal because we're really less than a 15% drop from the highs back in the spring, and so it's actually around 10, maybe a little.
I think we're right at about 10.
And so I think this is normal. To drop another 2 or 3, 4% would not be abnormal. To drop all the way down to 38 would mean we had a fairly serious decline, but that also is not not that out of the ordinary. So I feel fairly good going forward. I think we just need to be cautious and don't get too rambunctious in what we're trying to do. But I do think that there's going to be some opportunities out there, and so that cash that you may have on the sideline, or maybe you reposition into a little bit more growthier areas sometime, whether it's the next 2 weeks, the next 6 or 8 months, I don't know, somewhere in that time.
Yeah. Well, fantastic. Well, we certainly appreciate you tuning in again this month, and we'll be back in November with hopefully a new bright outlook on what's happening, and maybe we'll have a little more clarity in terms of where things are going. But in the meantime, be sure to reach out to your advisor and use this opportunity to get a plan in place for 2024. And also it's always a good time to kind of do a check-in and see where things are at.
It's a good time to enjoying the fall, too.
It is a great time to enjoy the fall as well. So, as always, thank you.
Thank y'all.